Good afternoon, everybody. This is Andy Pedraza with Special Effects Academy on the December 9th, 2018 Forex Weekly Outlook, our start of the week session for the Forex trading month. We will be covering our usual agenda. The prior week, the currency strength meter, our fundamental announcements, an analysis of the major pairs, any setups in progress, and a few parting words. Starting off with our long-term account, this was another down week. We basically exited a few losing trades. We had a small blip of profit there along the way, but essentially a down week. On the plus side of that, we do have multiple trades that are moving in our direction. So while we expect a bit of a drawdown while these play out, the account should be recovering nicely in the next week or two as some of these other trades hit their little home runs. We've already got some movement, especially on the pound pairs, but they were not big enough to have played out this week. We're waiting essentially on Brexit, which I know I keep saying it's coming, the whole pound drop with Brexit, and so far it hasn't played out, but trust me, it will. And when it does, it will probably be with us with a vengeance. So for now, we'll continue to hang on to those trades and wait for them to play out in our favor, which again, I have no doubt they will. Just have to be a little bit patient. On the short-term account, we had a better week. We had a little bit of growth, about 3% growth on the account, and we have one remaining trade that was left open over the weekend. It was at profit, but not enough profit for me to take, and I do believe in that trade, the Euro Swiss short, and I'm waiting for it to give us a little bit more bang than we've had so far. So we'll have that carry over and see how it treats us next week. For now, these are the results for the end of the week. Notes and opportunities, as I mentioned, losing trades were exited on the long-term account, with the winners continuing to move in our favor, not by a whole lot, but again, I expect that to change as Brexit starts playing out in the UK. So we do expect some short-term drawdown, which is what we've been seeing on the account while these play out. But as I said, you got to be in the game to actually win it, and this is the price you pay sometimes for being in that game. So Brexit is definitely heating up. Yes, I know I've said it before, but Brexit has a deadline, and that deadline is pretty much come and gone for them to have an agreement that everybody agrees on. They're nowhere close to having this agreement. In fact, we're moving further and further away. It's not looking good. Theresa May's chances of staying in power through the actual Brexit in May are looking slim to none right now. And when that happens, when that inevitably plays out, we're going to see some really good opportunities to take profit from the pound pairs throughout at least the next 2 weeks, because it is heating up and potentially well into next year. Trades remaining open on the short-term account, as I covered in the prior slide, that Euro Swiss short, which I do still have high hopes for, and we'll continue to carry that one for as long as it takes. So that's a short-term trade that may turn into a little bit of a longer-term play, but so long as it's moving in our direction, I will happily keep it open. Relative strength meter for the past couple of weeks. So on the right-hand side, you can see last week, the left-hand side, the week before. We can see that volatility took a huge increase from 1.89% all the way to 4.5%. So we've seen that is all fundamentally driven. And we can see that the big loser this week that just ended was the Aussie, which was one of the big winners the prior week. So the Aussie seems to be taking turns, going long 1 week, short the next, and basically repeating that pattern. We already have plans to take advantage of that since this was a down week for the Aussie. We're expecting the next one to be an up week if it continues to follow that pattern. And so the Aussie will be on our radar for the week to come. The Canadian had a pretty bad week, mostly based on oil prices. So again, the fundamentals are what are the fundamentals are what's playing out in the market right now, more so than the technicals. The Swiss, it had a pretty decent week. It gained ground against everybody, every other currency. So that was one of the clear winners. However, it did not move very far. We can see that that deep blue color that you can see in some of the other currencies or instruments is lacking in the Swiss. So while it did gain, it did not gain a whole lot. The euro was very middle of the pack. It gained ground against everybody except the Swiss and the yen. The pound, of course, is a straggler. It's already starting to show weakness as all of this Brexit stuff plays out, but not a whole lot of weakness. Again, very light shading. It didn't move as much as some of the other instruments out there. The yen gained ground against everybody except the Swiss. The Kiwi had also a bit of a bad week, not as bad as the Aussie, but they do tend to move in lockstep. So the Kiwi is also doing an up week, a down week, an up week, a down week, and we're waiting to jump into. Actually, we have a long-term trade open on the Kiwi dollar, so we're already playing into Kiwi strength, but we may add some more trades to that if it starts playing out. The dollar, very middle of the pack. The dollar has been having issues as well. So it did gain ground against the Kiwi, the pound, the CAD, and the Aussie. Lost against the Swiss, yen, and euro. And of course, bullion, we can see that bullion had a fantastic week. The more uncertainty there is in the currency markets and in the markets in general, the better gold and silver will do as safe havens, as shelters for people's money. So silver outperformed everybody else, and gold outperformed everybody else except for silver. So that is our bullion market right now. With that, we'll move into our fundamental announcements. We do have the Swiss monetary policy assessment is coming out Thursday in the wee hours, 2:30 a.m. We will be trading that live. I'll send out a schedule for that. And they do have a press conference scheduled for the same time as the London Open, 3 a.m. on Thursday morning. That same Thursday morning, we have the European Central Bank interest rate position out of the Eurozone. That's going to be at 7:45 a.m. We'll be trading that one live as well, probably opening up the trading room around 7:15 Eastern time to get that done. And that is it for our fundamentals. Looking at the major pairs, and I'm not going to spend a whole lot of time on them this time around because, again, this is a very fundamentally driven market. So there's no sense in looking too strongly at the technicals when I don't expect them to apply until we get out of this fundamental forest we're lost in right now. So fundamentals are going to be outweighing everything else. Euro dollar is in consolidation. It's hanging out near the bottom of its maximum point of recent weakness with the dollar. Obviously, dollar strength, euro weakness is what this chart is telling us, and we're waiting for a breakout in either direction. Pound dollar, all I can say is that it's at its lowest, and it will drop further as the Brexit situation plays out. All these pound pairs are going to be a disaster for anybody that is long in them. These things are going to drop like there's no tomorrow. The question is not if, the question is when. This is a classic example of one of those. The only thing that can stop this one from being an outperformer is the dollar weakening at the same time. So this one, probably not your best bet, but it will drop. USD/JPY, the yen is a safe haven for the Europeans, so we should expect some movement on the USD/JPY if the Brexit scenario plays out this week. Without that, it is in consolidation. It's very near the top of the chart, very near the maximum point of weakness of the yen against the dollar. And as with the euro dollar, we're waiting for something to cause a breakout. USD Canadian, oil prices have been negatively impacting the CAD, and we can see that it's exceeded the prior high by a fair margin before dropping back pretty much to that level of the prior high we had in May of this year. Not a pair I would like to trade long term because oil prices will come back at some point, and when they do, the USD CAD is going to drop all the way to the bottom. I don't want to be on the wrong side of that, but definitely a pair to keep an eye on for if and when these oil prices start recovering. USD Swiss, another consolidating pair, and another one where I'm waiting for a breakout in order to trade it again. None forthcoming so far. Aussie dollar, this is a recovery. The Aussie had the worst year in my memory, and it's dropped consistently against the dollar throughout from January through today. And around the end of October, it started showing life and is now trying to make a bid towards the top. It is going up one week, down the next, up then down, and we're currently in a down. I would look for opportunities to trade long on this one if and when it bounces off of that Ichimoku cloud there on the chart. So, and this would be a repeat scenario. Every time I see it test support, I would go in long for as long as it continues to move towards the top. Same thing can be said about the Kiwi dollar. Yeah, except that the Kiwi dollar is doing a much stronger play than the Aussie dollar. So this one is in a much better recovery. The retraces are very small. We're already long in this one on the long term, and I will continue to keep that trade open as long as it continues doing what it is doing right now. This is a retracement chart. This is long. I would not be trading this one short for any reason. Wait for a good opportunity and buy into it if you haven't already done so. Aussie CAD, vulnerability of the CAD to oil prices, of course. I would expect this one to continue heading up after this retrace that it did this week that just ended. So I'll be looking for opportunities early in the week to go long on this one. Euro Chef, Euro Swiss, it is consolidating. Probably going to give, we're already short on this one. So we're already seeing it trying to threaten the bottom of the chart. This is one of those where the more turmoil in Europe, the more likely that we will have a breakout towards the bottom. And that is why I already entered this trade. So not much more can be said than that I expect it to continue heading down on a definitely bearish chart. Euro pound, not my favorite pair to trade. Both the euro and the pound will suffer as a result of Brexit, but all in all, the pound should get weaker quicker than the euro, so this one should tend to go up towards that previous high that it did back in August. I am not going to be trading it, but if you guys do trade it long. Euro JPY, another consolidating pair, and another one that will benefit from Brexit distress. We will be seeing this one head towards the bottom, and it's I forget how many pips, but call it about 300, 350 pips to the bottom. You just have to wait for that move to begin. I would not be entering it right now. It's still too sideways for my taste. Euro Canadian, same as with the Euro JPY. We need to wait for a breakout. We need to wait for oil prices. We need to wait for Brexit. This is too sideways for my taste, and I will leave it for the time being. Pound JPY, already in this trade, already short, happily short. We will start carrying a ton of profit as soon as some of this Brexit news starts playing out. It's been unfortunate that it's taken quite a while for this to get going, but once it does start picking up, and you can see that this chart is already heading towards the bottom yet again, this is going to be one of the big movers, because pound weakness means that people are going to be moving their UK currency into the yen for safekeeping, which will make this chart rush to the bottom. If there's one pound pair that you guys trade short right now, let it be this one. Aussie JPY, again, I'm not too convinced of anything with the Aussie JPY because both of them are going in consolidation. They're getting strong one week, a week the next, and I don't want to be caught into that with this pair. So while I like it because it has a good potential for big moves, it's just too scary for my taste. There's many other things we can trade out there that do not have the problems that the Aussie JPY does. Euro New Zealand, this is my favorite for the past month. You can see from all the red and blue arrows how we've been trading it down, 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 down. And I would be waiting for the current retracement to end for it to bounce off that resistance there above the current price in this chart. I'll be waiting for that turnaround to short it yet again. So that will be a trade for this week if, of course, if it does do a bounce off that resistance. And last but not least, our pound CAD, again, weak currency against weak currency, not my favorite thing to trade. It's very sideways. And until we see a breakout, I'm not going to be too inclined to take any trades on this one. That is it for our charts. Again, mostly fundamentals being played out. Don't ignore the technicals, but don't place trades solely on technicals until further notice. The fundamentals are what's driving the market. Setups in progress. The USD, they can go in either direction because we have a lot of Trump-driven movements that are playing out between the China trade wars, the sanctions, oil price. There's a lot of stuff, and Trump injects himself into everything via Twitter. And the market is dumb enough to just bounce every time he does that. So be careful with the US dollar pairs. Euro pairs, we would expect to see continuing strain due to Brexit, as well as some internal issues in the EU. Of course, we do have the interest rate decision coming out this week, so that fundamental will also play into it. But all in all, I am short on the euro and will continue to remain short. Pound pairs, I'm not going to repeat it anymore. Brexit, Brexit, Brexit. There, I did repeat it. So keep that in mind. Kiwi, the Kiwi is gaining strength across the board, and I'm going to continue to look for opportunities to trade it against weaker currencies, specifically the euro. And last but not least, the CAD pairs. The CAD is unwinding as it's crushed by dropping oil prices. But be careful. A turnaround on oil at any point will cause a turnaround on the CAD pairs as well. Don't be caught on the wrong side of history, as they say. And last but not least, again, Brexit. I'm going to keep repeating this until it happens, because when it happens, we're going to make a ton of money. Brexit. The UK, Theresa May's government is hanging by a thread. Brexit may not even happen at this point. The EU has already tendered an olive branch saying that they can take it back. If they do take it back, it's going to cause civil war, not literally civil war. It's going to cause a huge ruckus inside the UK, because more than half the people are going to be legitimately saying, what the hell? We voted to get out, and now you're telling us that our successful vote doesn't count? And it's not going to be pretty. But you have to be in it to trade it. So, or rather, you have to be in it to profit from it. So pick a side. If you think I'm right, short this thing. If you think I'm wrong, well, you know what? Follow your instincts and go long, but do something. Don't let me ask you 3 months from now, how did you make out on Brexit? And tell me you stayed on the sidelines. That's not where a trader should be. Trader should be in the thick of it, never on the sidelines. And that's going to be it for me today. Does anybody have any comments or questions? Okie dokie. Then on that note, I thank you very much, and I will talk to you throughout the week. Thank you so much for joining. Take care.